Hello, and welcome to this webcast introducing the IFRS Taxonomy 2021, released at the end of March 2021. Thank you for joining us. I am Tarca, IASB member, and I will be joined in this webinar by Izabela Ruta, IASB staff. Before we start our presentation, I would like to note that the views expressed in this presentation are our own, and they do not necessarily represent the views of the IASB or the IFRS Foundation. Let's first explain what we're trying to cover today. We will start by presenting a high-level overview of the changes introduced to the 2021 IFRS Taxonomy. We will initially discuss changes to the IFRS Taxonomy that reflect amendments to the IFRS standards issued in 2020. Then we will explain the final changes to the IFRS Taxonomy coming from our analysis of common reporting practice. We will finish our presentation by explaining some supporting materials for using the IFRS Taxonomy and how stakeholders can get involved in the development of the IFRS Taxonomy. And I do encourage you to do that. So first, let's see what changes you should expect to see in the IFRS Taxonomy 2021. We have published 5 IFRS Taxonomy updates, which explain various changes introduced in the IFRS Taxonomy. Over the past year, we have published proposed versions of these updates to gather feedback from constituents on the proposed changes, as required by our Due Process Handbook. After considering feedback from stakeholders, we compiled all the changes into the 2021 IFRS Taxonomy. We will discuss those updates in more detail on the next slides. We have added more than 100 new tags to the IFRS Taxonomy. Those new elements reflect new disclosures in the IFRS standards, as well as common reporting practice that we've observed when analysing over 400 electronic financial statements. We've also added changes to the IFRS Taxonomy to address 6 issues raised by stakeholders, where stakeholders felt that improvements to the IFRS Taxonomy might improve the quality of electronic information. As mentioned, we have published 5 taxonomy update documents setting out changes to be made to the IFRS Taxonomy. 3 of these updates reflect changes to the presentation and disclosure requirements in IFRS standards issued in 2020. 2 updates reflect the analysis of common reporting practice derived from electronic filings of companies applying IFRS standards. Let's first discuss the updates that reflect the amended presentation and disclosure requirements in IFRS standards. In Update 1, we added a few tags to the IFRS Taxonomy to reflect amendments to IAS 16 that provide some accounting relief for lessees whose rent changed due to COVID-19. These changes are effective for annual reporting periods beginning on or after 1 June 2020. We added a few tags to cover additional disclosures for financial instruments required by amendments to IFRS 9, which are related to IBOR reform. Those changes are effective for annual periods beginning on or after 1 January 2021. There are also a number of changes to IFRS 17 for insurance contracts issued. Those amendments are designed to help companies to implement the new insurance contract standard. We added over 20 tags and amended a number of existing tags to cover new and amended disclosures. In addition, the mandatory effective date of IFRS 17 and related IFRS standards was changed from 2021 to 2023. We reflected these changes to the effective date for all elements referenced to those standards. At the same time, the board amended IFRS 4, the IFRS standard for insurance contracts, which will no longer be used once IFRS 17 is effective. It allows some companies to delay the application of IFRS 9 until such companies apply IFRS 17. We reflected those changes to the expiry date for all relevant elements. Update 3 also includes explanation of the impact of the new disclosure requirement in IAS 16 for proceeds before intended use. This new disclosure was reflected in a few new elements added to the IFRS taxonomy, which are effective for the annual reporting periods beginning on or after 1 January 2022. I'd now like to hand over to Isa, who will speak to you about changes related to the analysis of common reporting practice and general improvements. Thanks, Isa.
Thank you, Anne. Hello, everyone. As Anne mentioned, I will focus on changes to the IFRS taxonomy related to the analysis of common reporting practice and general improvements. As we discussed before, the IFRS taxonomy reflects the presentation and disclosure requirements in IFRS standards. However, companies often provide information that is not specifically required by the IFRS standards. For example, they may disclose additional disaggregation of information required by standards. We add IFRS taxonomy elements for such commonly disclosed information, so entities do not need to create their own elements, which are called extensions. It makes the electronic information easier to use, because it makes tagging more consistent. When analyzing reporting practice, we have also noticed inconsistent tagging in some areas. So we made changes to the IFRS taxonomy to reduce that diversity. We have amended element labels to clarify the accounting meaning of elements, added more guidance to the IFRS taxonomy elements to clarify the correct use of those elements, and improved IFRS taxonomy modeling to reduce diversity in tagging. We started analysis of electronic reporting in 2019. We used reports of companies that apply IFRS standards and file to the US regulator. We used those reports because they are easily available and reflect reporting practices from around the globe. While performing the analysis, we also focused on issues raised by stakeholders. We started our analysis on the information presented in the primary financial statements, related to financial position, financial performance, cash flows, and changes in equity. We also looked at how companies report information related to earnings per share. The second analysis was related to the information reported about employee benefits. This review happened together with the board's review of disclosures in IAS 19 in the project related to targeted standards level review of disclosures. We improved taxonomy to help users more easily analyze electronic information. Now, preparers will need to consider how those changes in the IFRS taxonomy will impact their tagging. We grouped those changes into 3 broad categories that explain how and why preparers should reconsider their tagging. Some entity-specific elements might need to be replaced by the new IFRS taxonomy elements to improve consistent tagging. Some IFRS taxonomy elements have been removed and replaced by clearer elements or models, so preparers will need to consider which new elements to apply. Some element labels were clarified, and companies will need to consider whether those elements correctly reflect information tagged. This is because we found errors and inconsistent tagging when companies used those elements. Before I start explaining changes to the IFRS taxonomy presented on this slide, I would like to mention that those are only examples. For more comprehensive explanation of changes to the IFRS taxonomy, please refer to the supporting materials. I will mention those materials later in the presentation. In Update 4, we analyzed information presented in the primary financial statements. As a result of this analysis, we added new common practice elements for areas where companies typically created extensions. For example, we added elements to reflect commonly disclosed information about attribution of expenses by nature to their function. Those elements will allow tagging, for example, the amount of depreciation expenses attributed to cost of sales, or the amount of depreciation expenses attributed to selling, general, and administrative expenses. We added elements to reflect common disclosure of the amount of cumulative catch-up adjustment when companies transition to new or amended IFRS. We added elements that allow users to identify supplementary information presented in a currency that is not the presentation or functional currency of the reporting entity. We also noticed that companies commonly disclose information about warrants. So we added relevant elements to the statement of financial position, cash flows, and changes in equity to allow consistent tagging of this information. Let's move to the second type of changes in the middle column. We changed the way the IFRS taxonomy treats information about basic and diluted earnings per share, EPS, when basic EPS is equal to diluted EPS. We noticed that companies tag such information in different ways, which was possible in the IFRS taxonomy. So we removed a set of elements from the IFRS taxonomy that combined basic and diluted EPS. Now all companies should double tag such information using two separate elements, one for basic and another for diluted EPS. We added guidance to those elements to explain how this tagging should be done. We also noticed that companies report deferred income and accrued income inconsistently. To help achieve consistency, we deprecated a set of elements related to deferred and accrued income and create a set of new elements that clarify how contract assets and liabilities relate to deferred and accrued income. To help prevent tagging errors, we also made changes to element labels and guidance labels. Those changes are illustrated in the third column. We amended the documentation label for cost of sales to clarify that this element should not be used for cost of sales amount that exclude depreciation expenses, when in fact company considers depreciation as part of cost of sales. We clarified labels for elements related to other comprehensive income. For example, we have clarified which elements should be used for tagging OCI before reclassification adjustment and which for tagging OCI after reclassification adjustment. We also added guidance labels for some elements to help companies avoid incorrect tagging. For example, as mentioned before, we added guidance for elements related to basic and diluted earnings per share to explain that companies should use both elements to tag the amount of basic and diluted earnings per share when it is equal. In Update 5, we explain changes to the IFRS taxonomy that better reflect information related to employee benefits accounted for applying IAS 19. We added new elements to reflect common reporting practice. For example, we added a set of elements to allow tagging of a disaggregation of the fair value of defined benefit plan assets, which is presented as percentages. Previously, the IFRS taxonomy included only elements for tagging the disaggregation of numerical amounts. We added elements to enable tagging of commonly disclosed maturity analysis of defined benefit obligations. We also added an element for tagging the total post-employment benefit expense in profit or loss. We noticed that companies were confused how they should tag changes related to the net defined liability or asset. So we made a comprehensive changes to the IFRS taxonomy to improve consistent tagging of that information. Let me explain it in a bit more detail. IAS 19 requires a reconciliation from the opening to closing balance of the net defined benefit liability or asset. We observed that companies often used incorrect signs when tagging information in the reconciliation. So we amended the labels of the relevant elements to help clarify what sign should be used when tagging this information. In addition, we found that companies sometimes tag amounts presented in the statement of comprehensive income using elements that are designed for the reconciliation. This often led to even more confusion about the appropriate signs to use. So we created a separate set of elements that can be used to tag income and expense from defined benefit plans in the statement of profit or loss and in other comprehensive income. We also noticed that companies often incorrectly used elements related to reconciliation of reimbursement rights to tag amounts not related to defined benefit obligations. For example, reimbursements related to legal claims or tax investigations. So we amended the label of those elements to clarify that those reimbursement rights relate to defined benefit obligations. Now we would like to briefly discuss the resources available to help stakeholders correctly use the IFRS taxonomy. We provide help with using the IFRS taxonomy and avoid some errors in a variety of ways. Some guidance is included in the IFRS taxonomy because it relates to the correct use of specific elements. Those are references to explain the IFRS requirements each element reflects, documentation labels to provide the definition of an element, and guidance labels that explain how to use the element. For example, which sign to use. We also have a number of supporting materials on the website. Updates are helpful in explaining changes made to the IFRS taxonomy. Versioning information illustrates how those changes affected the IFRS taxonomy. We also have guidance for preparers that explains general use of the IFRS taxonomy. At the bottom of the page, we refer to the website where you can find more supporting materials. For example, a sample of illustrative examples from IFRS standards which are tagged using IFRS taxonomy elements. IFRS taxonomy formula that allows automatic check for some errors in the filing. Or XIFRS, which shows IFRS taxonomy elements located next to appropriate paragraph of IFRS standard. We would like to encourage you to get involved in the development of the IFRS taxonomy. You may follow the IFRS taxonomy changes by signing in to the IFRS website and follow the IFRS taxonomy topics. We also frequently post updates on ISP LinkedIn account and IFRS Foundation Twitter account. You can observe online meetings of the external group of experts in the IFRS Taxonomy Consultative Group. You can comment on the IFRS Taxonomy updates when they are published for comments. Or you can contact us with suggestions for improvements to the IFRS taxonomy that might be a common issue in practice. We would like to highlight here that we may not be able to reply to specific messages, but we do consider all suggestions when developing the IFRS taxonomy. Now, thank you for your time. We hope you have found this presentation helpful. Goodbye.